Promised, we have Mr. G.Shivakumar, Executive Director and CFO of GE Shipping, who's now joining us today. Mr. Shivakumar, we'll talk about GE Shipping in a minute, but right now the focus is on shipping as a sector in India. There are reports coming in that going forward, the government may actually take up shipping for reforms. Maritime India Vision 2030 may be launched. There's a lot of buzz around government initiative. I'm told that global yards are quite chock-a-block for next 2-3 years, so India may offer. As an industry veteran, tell us, where do we rank in terms of shipping versus globe right now, and what are the prospects if some policy impetus does indeed come?
So first, in terms of shipping fleet itself, the Indian flag probably has around 1% of the global fleet itself. So it's a very small part. Again, as an industry which is a very highly capital intensive industry and in India, capital cost is a little higher than in a lot of the overseas jurisdictions like Europe or even China or Japan. Therefore, it makes it a little more difficult. If there are some incentives coming for shipping, we welcome that. We believe that Indian shipping should be much bigger. And it would be good if the Indian shipping industry grows and the Indian shipping fleet grows.
So, one is growing the fleet. The other is, the talk is that India can emerge as a shipbuilding, ship repair kind of a hub as well, because the idea is, and the way we are developing our ports, the idea is to attract a lot of transit traffic here as well of the region. Is that is also a good opportunity?
Yes, the ports development can happen. A lot of India's transshipment, again, this is not our business. We are not in the container business, but a lot of that happens through hubs overseas, which typically used to be Colombo, Dubai, maybe Singapore. But it would be great if a lot of that cargo could get captured in India. Again, I hasten to add, this is not our business, and I'm speaking as a layman really, with some understanding of shipping.
Exactly. You guys usually buy second-hand assets globally when the cycle is down, but how do you guys manage your, repair work, maintenance, all of that, and industry practices? Can there be a good boost coming in?
Oh, you mean towards the yard slots in India are not available. We don't have the capacity for ship repair. And here, I must hasten to add that it's not just having the yard itself. There is a whole ecosystem which is built around ship repair, which is you need to have, there are a lot of equipment manufacturers, a lot of equipment on ships. And in order to do ship repair, you need to have all those equipment manufacturers having workshops or service engineers around. And so that's a constraint also. In fact, other countries have had ship repair yards. The problem which happened was that they didn't have the ecosystem around it. So you had to send the equipment off, traveling a day or so in just to do the equipment overhaul. So that makes it more difficult. And ship repair, again, is a very short time frame project where it's every day is critical because you need to then have your customer requirements in mind, because we are also committing our ship to our customer on a particular date. So it'll require having an entire ecosystem developed around that, and the ability to execute these ship repair projects absolutely on time.
Mr. Shivakumar, good afternoon. This is Vinny joining in the conversation as well. But, let's focus and, now talk about GE Shipping and the shipping rates. When you talk about that, in the last couple of months, I believe, that's grown 4 to 5 times in just the last couple of months in terms of the rise that we've seen there. One, what was the impact? And, how long do you think that this is going to, stay at these elevated levels, the shipping rates?
Yeah. Hi, good afternoon. I had just one correction there. The rates that have gone up 2x and 3x over the last few months have been on the container side, and again, where we don't have a presence. So in our sectors, there has not been such a dramatic move in rates. In fact, rates are around where they were a couple of months ago, whether it's the bulk carriers or the or the tankers. So it's not changed that much in the last 3-4 months, really, in our sectors. It has moved up in comparison to the same period last year because some of these things are seasonal, but it's not moved up that much, as much as containers. And containers have been very heavily affected by what's happening in the Red Sea because a lot of container ships are rerouting.
Out of your entire fleet right now, how much is on spot and how much is on long-term rates? And also, do you see upward bias in revisions of rates going forward?
Yeah, so we have currently, I think, 9 ships which are on charters which are of 1 year or more. And that doesn't mean the remaining time. When they were fixed, they were 1 year or higher. Each of those charters was done higher than the last done charter rate. If they were on charter, time charters, we call them time charters, these fixed rate contracts. If they were on fixed rate charters before and they went on to a new fixed rate charter, those rates were higher, significantly higher than the previous contracts. Some of them went from the spot market to the fixed rate market, in which case you can't do a comparison. You can't do a comparison between the spot rates and the fixed rates. But the direction is slightly firmer rather than weaker. Yeah.
And so what I also want to know is in terms of the offshore rigs, they are getting contracted around 2 times of the global average price is what I'm understanding. What could the new contract rate looks like for the company? What are we expecting on that front going forward?
Yeah, I think this 2 times the global rate is not, I don't know where that number is coming from. What has happened is that we had a contract, a repricing of one of our contracts. We were on a 3-year contract at a certain rate, and the new rate, which the rig got fixed on, and this happened sometime in the second half of 2023, the new rate was about 70% higher than the previous rate. So but it was higher than the previous rate, again, because of the market improvement. We don't know what kind of pricing will happen in the next contract. This is a tender-driven business. It depends on who's L1 and what is that L1 rate. And in the tender business, you have to match L1 in India. You have to match L1 if you want the contract. So it's really tough to tell. But I think we can say that rates are likely to be higher than the previous contracts that the rigs are currently running at. And we have 2 rigs which come up for pricing within the next 3 to 6 months.
Just before I let you go, I just want to understand, your cash flow situation is so strong. What do you do with your extra cash on the books? Do you make a buffer for buying assets again in a downtime, or invest it in the meantime? What exactly is because your utilization of that surplus cash, I'm curious to understand.
Yeah, that's exactly what we do. Our cash is here to provide us the opportunities to move quickly and buy quickly when we feel the prices are right. So our cash management is purely liquidity management. Currently, we have a cash balance of about 5,500 crores or so. It is purely treated as a liquidity management function. We keep it in debt funds, bank deposits, and that's it. And it is available to invest with a couple of weeks' notice, the money, so that we can move quickly, because that is critical to success in our business. When the market drops and you get your prices, you need to be able to execute in large volumes.
Excellent. All right, Mr. Shivakumar, we'll let you go on that one. Thanks so much for joining us on the show.
Thank you so much for having me.
That was Mr. Shivakumar of G Shipping. We'll take a short break on that note, but before that, commentary.
If you like this video, then like, share and subscribe to ET Now.